A loan with no strings attached, as Spain gets $125 billion to rescue its banks. Is it a bailout package under a different name, a temporary painkiller, or a long-term solution? And will it be enough to stop the fear of contagion spreading to Italy? This is Inside Story. Hello and welcome to Inside Story. I'm Stephen Cole. The Spanish Prime Minister Mariano Rajoy has called the Eurozone decision to lend Spanish banks up to $125 billion a victory for the euro. The financial plan to shore up Spain's position had been agreed ahead of elections in Greece on June the 17th. Elections that could push Athens out of the European Union and spark a flight of capital. Well, Spain, which is the Eurozone's fourth largest economy, has joined Greece, Ireland and Portugal in asking for outside help to survive Europe's debt crisis. But the Spanish government has refused to accept this as a bailout. Instead, it's calling it a soft loan. From Madrid, here's Jonah Hull.
These are the headlines Spain's government never wanted to see. The word rescue emblazoned across the papers. It means bailout. The Prime Minister spoke on Sunday, the day after Spain finally called for European Union help. He reiterated the government line that this was nothing more than a bank loan.
We are all devoted and committed to doing all we can to reduce our debt. Important decisions have been made in the central government and in the autonomous regions. There have been structural reforms made in order to make more employment available, and now we are restructuring our financial system.
Mariano Rajoy struck a tone of unremitting optimism, defending his six-month-old government's record on the economy and promising that a return to banking liquidity in Spain would bring growth and jobs. In making that sort of promise, Mr. Rajoy risks talking himself out of a job. Spain is by no means in the clear. There's plenty more bad news around. The country's economy is in recession, unemployment is soaring, its credit rating status has been reduced to near junk, and next week's Greek election could sow more seeds of Eurozone panic and contagion. What the government most wants to avoid now is political fallout after weeks of denying that it needed financial help.
It is a disaster. We're cheated everywhere, and neither work nor honesty is worth anything. Do you want me to go on? Because for me, it all looks black.
What concerns me is that the 100 billion euros is meant to be given to the banks. If the problem is Spain and its citizens, why is all that money being given to the banks? I just can't understand.
In Spain and more widely in Europe, there'll be the hope that fixing the Spanish banks will restore calm to the financial markets and renew confidence in the euro. But there's little in the facts to support the Spanish Prime Minister's positive spin. Jonah Hull, Al Jazeera, Madrid.
The agreement didn't impose any conditions on the Spanish economy, and no new austerity measures were asked for. Instead, Spain would only have to agree to new conditions tied to the reform of its banking sector, which is not the case with Greece. In May 2010, the EU made it clear it would only hand over the second half if Greece introduced a new massive austerity plan. Greece will have to reduce its debt to around 121% of its gross domestic product by 2020, and that means a reduction of 40% in the existing figure. Also in November 2010, EU ministers handed Ireland a $113 billion aid package. And in May last year, the EU approved $116 billion to Portugal. Both countries are said to have met the harsh austerity targets demanded under the EU-IMF bailout plan. So, will the Eurozone bailout work, or is it just another stopgap? To answer these questions, we're joined by our guests. In Madrid, we have Cristina Manzano, former Deputy Director of the think tank Freed. She's currently Editor-in-Chief of the online magazine Foreign Policy, Spanish edition. In London, Raoul Ruparel, Head of Economic Research at the think tank Open Europe. Also in London, Daniel Lacalle, Senior Fund Manager at the investment management firm Ecofin. But first, to Cristina Manzano. Cristina, Spain's economy minister, Luis de Guindos, says this isn't a rescue. So how would you describe giving a country $126 billion to recapitalise its banks?
Well, the impression here is that there was already time that Spain was helped by the European Union, and that we have been doing our homework so far, so we needed this help. We were trapped in a vicious circle of foreign debt, sovereign debt, and the markets closed to pay for our debt, and therefore the debt rising again and again. So it was time already for us to have some help from the European Union. That's the impression we have here in Spain.
So, Cristina, is it a rescue or is it a loan?
Well, it depends how you want to call it. The issue is that we are getting money lended from the European Union. In technical terms, you can call it a bailout, even if our government has insisted that it is not a bailout. There is a difference with the bailouts that have been done with other countries like Greece, Portugal and Ireland. It is not exactly the same because it only affects our financial system, but it is a bailout. It is a loan with better terms that in the markets to get money to try to help our financial sector.
Daniel Lacalle in London, the Spanish government insists this isn't a rescue, it is a loan. How much do the Spanish banks owe? Who do they owe the money to? And how much is a bailout going to cost them?
Well, the financial system in Spain has to be divided between what I would consider the commercial banks and the savings banks. The savings banks are estimated to have total exposure to real estate and non-performing assets of around 150 billion. Out of that, a percentage of around 20% has already been provisioned for. So you can guess that the maximum requirement that has been thought about by markets and analyzed by the investment community ranges between the 40 to the 100 billion that has been talked about this weekend.
Raoul Ruparel of the Open Society, why do you think Spain was so reluctant to ask for a bailout in the first place? If they had asked earlier, could the situation have been slightly eased?
Well, obviously, there's a huge amount of stigma that goes along with asking for international aid and funds from the European Union. And often, once you go down that path, it's seen by markets as very hard to return. And, you know, you're seen as being on dependency and reliant on European funding. And it's essentially an admission that the government can no longer fund itself on the market. So I can see why Spain was hesitant to go down this path. I don't know if they had done it earlier, if it would have made much difference. I believe they were focusing on their fiscal measures, and they were conducting the relevant tests to find out exactly how much the sector needed. I think this has been a problem not just for the past few months though, but for the past 4 years. So obviously it's been going on for a long time, and it should have been addressed much earlier, although I'm not sure if actually asking for European help a few months ago rather than now would have made too much difference. Ultimately, after delaying it for 4 years, they finally got down to deal with the crux of the issue. But you know, a few months here and there may not have made too much difference.
The Spanish Prime Minister attended a conference call. He then went to a press conference. He called this a victory for the euro. Then he flew off to watch some football in Poland. So does that mean he's not taking it very seriously?
Well, it does suggest that. I mean, Rajoy is often absent from press conferences. He leaves a lot of the actual announcements and dealings with the press to his deputies and to the relevant ministers of each department. But it does fail to inspire confidence. I think more concerning is this victory announcement. I mean, I don't see how it is a victory for the euro, particularly if you look at how Spain got itself into this mess in the first place. Ultimately, it is a problem with the Eurozone structure. Spain got massively lower interest rates for a huge amount of time, which caused money to flow into its economy and helped fund the bubble and bust we saw in the housing sector. So really the bubble and bust in Spain was a result, or partly a result, of the one-size-fits-all monetary policy and the structural flaws in the euro. So to declare it a victory once a bailout is needed to fix that is somewhat ironic to me, and I think he's clearly missing the problems which Spain faces in incorporating itself into the Eurozone if it is to do so over the longer term.
Cristina Manzano, is Spain finally facing up to the problems in the banking sector?
Well, this is the first step, of course, but it's not something that can be solved just with the announcement of the European Union. We still have to see how the whole decision evolves, what will be the conditions for Spain, and how the markets react. And that, together with the evolution of the reforms that that have been put in place by the government, it's not a very easy question to be solved in one day. It is a matter of the evolution of the whole Spanish economy together with the whole Eurozone economy. And the main problem now is that in Europe we are stuck in several decisions that don't depend necessarily on us. For instance, the election to be taking place in Greece next week. It is all too interdependent. So yes, I think this is a first good step, but of course it is not the end of the equation.
Daniel Lacalle, this is another banking crisis created by bankers at national level and also the cajas, the small banks. Whatever the crisis, the bankers caused it, but the taxpayers in Spain, they'll end up paying for it, will they?
Sure, yeah. Unfortunately, that is going to be the end game. It's part of the solution, as Cristina was saying, but is also a problem that has been going for too long, because the banks, most of them public, the savings banks, let's remember, were public entities, have kept the problem hidden and tried to maintain a path of hiding these problems until there was a recovery to unearth them. The recovery didn't come, so now you have a problem of toxic assets that are also impacting some of the non-toxic assets, and there needs to be a solution that is swift, that is quick, and that is, as Raoul was mentioning, something that the government should have done many years ago, and unfortunately it has to be done now, but it is the beginning of a solution. Now, for taxpayers to find themselves in a situation in which they have to bail out the banks again is a heavy burden, but at the same time it is the beginning of a solution that will help to reduce the block of credit into the real economy that we have seen in the last couple of years.
Well, that's not good enough, is it, for Spanish taxpayers? Any taxpayer in Spain, they want to get a loan. There are all kinds of strings attached, and they pay through the nose for the loan. But the banks seem to have got off again, and there doesn't seem to be, on the surface anyway, any strings attached to this deal. Should there be? Should they be told to clean up their act?
I think there will be strings attached. I think that there's been
Why aren't there strings attached?
Well, I think there will start to be strings attached, because the financial reform that the government implemented is a first step. This first real financial reform that we have seen a couple of months ago is an important step towards that. And I think there will be further measures for the banks to try to curtail the risk that they have been getting into in the last 8 to 10 years. However, it is absolutely true that right now the only solution is to put some public money, try to make these entities healthier, and then the taxpayer will also see some sort of benefit, like we are seeing in Ireland, for example, now after a few years of a very difficult but important step, which was to clean up the toxic assets assets of the banks. It's a difficult measure, but it had to be done many, many years ago. It didn't happen. Unfortunately, this is the government that seems to be tackling it, at least from a more reasonable perspective, in my opinion.
So better late than never. Cristina Manzano, is the real purpose of this bailout to create a sort of fire break between Spain's banking sector and its national finances?
Yes, of course, there is a very close tie between it, and it's been again a vicious circle of bad banking situation due to the real estate bubble that was created here and wasn't stopped by anyone, nor the government, nor the citizens, and the national finances. It is undoubtedly so. The macroeconomic situation of Spain before the crisis was in very good shape, and as I said, it has been aggravated by this vicious cycle of rising debt, rising real estate bubble, and recession, economic recession.
Is the real reason, Raoul Ruparel, is the real reason after so long that there's a sense of urgency at last because of what's happening in Greece, i.e. some deal had to be done, had to be completed before the election?
Well, I think that definitely sped up the timetable with which they were working with. You can see that they were very concerned about potential contagion from Greece, and particularly if an uncooperative government came into power in Greece, that knock-on effects and possibly even a Greek exit from the Eurozone would have on Spain. But this is an issue, as we've said, that they've been dealing with for a long time, and they've been working towards this stage over the past few months. So I think it was always in the pipeline this year, and I think it became inevitable at the start of the year, given the situation we saw in Bankia and some of the other cajas, that they would need European funds. Unfortunately, just let the problems simmer for too long and get too far down the line. So that was inevitable. The Greek situation simply sped up that issue and brought it home much quicker than maybe they thought. But I think it was always on the cards for this year.
Well, the European Union Economic Affairs Commissioner, Olli Rehn, said the deal was a clear signal that the euro area was ready to take decisive action, he says, to contain the crisis.
I'm confident that this will send a strong signal to the markets that the euro area is ready to support Spain in its efforts to restructure and recapitalize its banking sector. This is important in order to ensure that credit can flow to companies and households in Spain, and that we can contain the contagion which otherwise would be a possibility.
Cristina Manzano, how will this bailout affect Spanish ability to borrow in the markets?
We will see. Today, the markets reacted very well. At the beginning, the stock market went up and the bond yield went down. However, throughout the morning, we've seen that situation to reverse. And when just an hour ago, the stock market was rising just 1 point something. So we will see. None of the bailout countries so far saw a quick and sudden good reaction of the markets, especially regarding their bond yield. So it's something to be seen. This again implies a good reaction on the side of the European Union, but there are too many factors involved, and this solution alone will not solve the whole problem.
Daniel Lacalle, the euro crisis is killing any kind of Eurozone recovery. It's also hampering Britain's attempts at any kind of growth as well. Why is it taking Brussels and the bankers and those countries so long to deal with issues that are so urgent?
I think that there's a very clear root of a problem, which is the perception from every single country that their debt is not too high. And as such, if every single country assumes that their debt is not too high and that they have to increase their debt and that they have to spend more, the ball of debt continues to grow, and the risk that sovereign debt imposes on the economy, sovereign debt that was previously considered to be of no risk, is starting to be a real issue. I think that
how many more bailouts can the Eurozone afford?
Well, I think that the EFSF, the ESM can do more, but not a lot more. Countries need to really tackle the issue. That is that the banking system in the Eurozone is about 320% of GDP in terms of the assets that the banking system has. So the banking system has to be more efficient, has to get leaner, more effective. There have to be cross-country transactions. We need to see a much bigger improvement in the construction of a Eurozone that is much more than the sum of individual countries all pursuing to be as geared and as industrialized as the next one. So I think that fiscal union, more steps towards integration will do a lot more. But that is a clear issue. Yes.
Yeah, Raoul Ruparel, Spain is one of Europe's major economies. We've heard about Greece, we've heard about Spain, now Cyprus, possibly Italy is next, and one Italy guaranteeing some of the Spanish debt, which is one of the great ironies, I suppose. Are eyes across Europe really opening now? Are voices starting to admit that the euro could be in serious trouble?
Well, I think to some extent, yes. I think there is a change. As we mentioned earlier, there's this view before that it was a problem with a few countries, a fiscal problem, a debt problem. But now there is a broader admission that maybe there are some structural and institutional problems in the Eurozone, and that it spreads to the banking sector as well, and that all of these issues are coming together, which makes the Eurozone crisis so serious. So there is a bit more of an understanding and a deeper willingness to tackle some of the structural flaws in the Eurozone. Although they're not quite there yet, because you still see countries such as Germany pushing this fiscal consolidation and reform line and trying to set up a Eurozone with 17 export-orientated countries, when you simply cannot have 17 countries in one block running 17 surpluses, particularly when they all trade with each other. So, you know, it's taken some time to develop the understanding of the crisis and to admit the real institutional and structural flaws in this currency, which many of these people helped design. So there is a slowly the tide is turning, but they're not quite there yet, and there is still some way to go. And unfortunately, they may run out of time if they do not realise what the real issues that need to be tackled are.
Cristina Manzano, is Spain buying a solution or buying some time?
I think it's buying both. Definitely, it's buying time to wait and see how the other situation evolves. But it's also buying a solution, and even if there have been some mistakes in the communication efforts and in the way to proceed towards the European Union, I really think this means a push for a further fiscal union, for a further integration within the union. And I think that is important. We've seen throughout the last years, throughout the crisis, that Europe needs a big push to be able to react. And we have this big controversy between Germany's austerity plans and France and some of the rest growth impulse. And I think this can be a real push for the rest of the Union to go ahead, definitely go ahead.
Daniel Lacalle, some people believe that Spain has got off easy and has been offered a more favourable deal than, say, the likes of Greece, Ireland and Portugal.
Yes, I think that is a clear message that is seen everywhere,
so
particularly
why?
In markets. Well, first because of the size of the economy, but also it's important because I think that the measures that this government is taking and willing to take, because we're seeing this, we have to see this in the context not only of the measures that have been implemented, the banking reform, the labour market reform, increases of taxes and a cutting of spending as part of something that is ongoing. And I think that is going to continue. There will be further measures implemented on the banking system, on the power and sector. So I think that all of this gives a little bit more confidence to the Eurozone that it's worth taking the bet of giving better conditions to a country that for once seems to be doing the right things.
Well, the Spanish government continues to insist that being given 100 billion euros is merely a loan, not a rescue. But whatever it is, it looks as though those Spaniards still lucky enough to have a job will end up paying a very large bill for the privilege of doing so. Thanks to our guests in Madrid, Cristina Manzano, in London, Raoul Ruparel, also in London, Daniel Lacalle. And thank you very much for joining us on this edition of Inside Story. If you want to send us your feedback, just email your thoughts to us at insidestory@aljazeera.net. Thanks for watching from me, Stephen Cole. Goodbye.